right, welcome back. We've got another great episode of FedSmart for you. Some great information. If you're retiring soon or you're years from retirement, and even if you're retired, you will get some value out of what we're talking about today. We're going to talk about survivor benefits on our FERS pensions. Now, before we jump into it, for those of you not listening but actually watching, we
This is
do.
not a split screen.
Yeah, we are in that.
Okay,
He did
yeah, yeah,
slap me.
there you
That
go.
we are, Stephen and I are in the same room. We do get together from time to time and see each other. So Stephen lives in, super hot Arizona. So for some reason during the summer, he comes and visits me a lot. And then for some reason during the winter, I leave Colorado and go down and visit him in Arizona. I don't know how that worked out, but
Best of both worlds.
best of both worlds. So and he's taken a reprieve from the
15
115.
last week.
Yeah,
Yeah.
yesterday here in Colorado it was 83 degrees, and Stephen was nice enough to bring his family up here. So we get to record a podcast in the same room, which usually we're doing it remotely in different spots. So this is super awesome. As today we talk about the survivor benefits for your
We talk
pension.
about death today,
Yeah,
basically.
it's going to be a very uplifting,
Yeah.
happy topic where you're going to be excited and not bummed out at all. But all kidding aside, it is really important to talk about this. And it's also important, even if you're already retired, when we talk about survivor benefits, we're also going to talk about some things for your spouse based on the choices you've already made, but then also understanding how survivor benefits are different from some of the other things you want to look at for estate planning. So it's going to be some great information. So when we're talking about survivor benefit on your pension, this is a separate benefit than your federal life insurance or any life insurance that you have. This is what happens for your pension when you pass away. So the pension that after all these years that you've earned, how is it going to work for your spouse? And then also your insured interest, somebody who's not a spouse. We'll talk about that briefly, but we're going to talk about the main decisions that you're looking at when you retire. And again, for those of you who are already retired, some things to know about the survivor benefit. So here's what you want to know, kind of the main thing when you're looking at survivor benefit. First of all, you make your choices when you retire. When you're filling out the retirement paperwork, that's when you make the choice on what you want to elect to have happen for your pension when you pass away. And when based on those elections and what you choose, it's also going to affect your benefits and what benefits you leave to your spouse and your loved ones as well. So it's important to understand those. So the first thing that we'll talk about is the full survivor benefit option. The full survivor benefit option costs 10% of your pension to leave 50% of your pension if you pass away. And of course, we're talking about FERS now. We're talking about the FERS pension. If you were under CSRS, the older one, that is a fraction of a percent of people now. I mean, it
Yeah,
is like
that's rare.
they're endangered species because most people that are
We are going
CSRS,
to now get one comment
yeah, exactly. They're
saying,
going to be
hey, why
offended.
didn't you cover
We
this?
do have an older post on CSRS, and we would be happy to send you some information on CSRS if you need it. But again, because almost everybody is FERS, the ones that are SIRS, fun fact, they're all now 41 years and 11 months. They've maximized their pension. And so the only ones that are still working CSRS are those of you that like to work. You're not increasing your pension at all. Your pension is as high as it possibly can be. So that's why most people are not SIRS anymore. Just fun fact of the day. So when we're looking at FERS and we're looking at the full survivor benefit option for FERS, the first option for the full survivor benefit costs 10% of your pension to leave 50% of your pension to your survivor when something happens to you. So, for example, a $3,000 a month pension, it costs you $300 a month off of that. That's the cost for the survivor benefit to leave $1,500 a month to your survivor if something happens to you. Okay, so that's the full
And then they
survivor
can
benefit
keep
option.
your health benefits, which you're
Yeah.
probably going to hop into.
Yeah, he really was anxious to get that out
That's
there.
all I got for you guys. I'm going to go back to sleep.
In order to make sure that your spouse can keep the health benefits, you need to choose one of the two survivor benefits that we're talking about. So if you choose the full survivor benefit option that costs 10% of your pension and leaves 50% to your survivor, they also, when they're receiving that $1,500 a month in my example, they also now can keep the federal health insurance for the rest of their life as well. So even if you pass away, Your spouse is getting $1,500 in my example. They also now can continue the federal employee health benefits for the rest of their life as well. And they can even cover a family. If you still have kids, that are on the plan, they can still have a family plan as
They can
well.
still make
They
adjustments
can
to
still
it.
make adjustments. They'll have the annual open season so they can keep their health insurance. But if you choose the reduced survivor benefit, which is the next option, you can still keep your health benefits if you choose a reduced option. Stephen, what is the reduced option cover? What's the cost and how much does it leave?
So it's basically half of what the maximum or the full survivor benefit is. It costs 5% of your pension instead of 10, and it will leave your surviving spouse or insurable interest 25% instead of half your pension. So for example,
3,000.
3,000, it would cost them 150 per month. Ooh.
Ooh,
And then it would leave them 25% of their pension, which would be $750 per month.
correct. He helps
Calculation's
people with
working.
their money, so he knows math.
Man, I was kind of
Yeah,
spazzing
that's
there
why
for a
you got a
second.
little
Like,
nervous. Like, you got to make the numbers right. But
that's right.
you did.
Yeah.
Yep. So he's right. So, like he said, that's the reduced survivor benefit option. And as we already mentioned, with that option, they also can keep the health insurance. Your survivor can keep the health insurance as well if you choose that option. Now, if you choose the reduced survivor benefit option, though, your spouse does have to sign off on that, saying, I know
And
that
it
my
has to be
spouse, and it
notarized
has to
too.
be notarized, it has to be legit. It has to be signed and notarized by your spouse that they know you're choosing a reduced survivor benefit option. So you need to know that as well. They also need to sign if you choose the third option, if you choose what's behind curtain number three.
And you better go hide if you choose that one.
Yeah, or you have a good plan.
Yeah,
Maybe there
exactly.
actually
You
there
don't
are
have,
reasons
there
to
is
not
very good
choose it.
reasons.
He's just teasing. There are reasons actually to not choose it, which is the third option is choosing no survivor benefit at all. So the pension, our example, $3,000 a month. It's always going to be $3,000 a month. There's no reduction for a survivor benefit. But when you pass away, your pension stops. So if unfortunately, and we've been doing this, I've been doing this 21 years combined, we've been doing this almost 30 years. And we have seen situations, unfortunately. I had a client in Denver, chose no survivor benefit for a legitimate option. But here's what's crazy. He passed away, he retired on a Friday, passed away on a Monday. And so ended up getting one pension payment because it had been processed and then no pension after that. After 30, I think it was 36 years he worked, there was no pension. But don't fret, there's a reason he did that. There was other benefits involved. But the point is, if you choose no survivor benefit, your pension stops when you do. When you pass away, so does your pension payment. It is now deceased.
So do
Also,
the health
so
benefit.
are the health benefits. Steven's really excited about
I
that
just
today.
really want to talk health benefits.
He wants to talk health
We
benefits.
just switch topics real quick.
Yeah, we'll switch and let you know that the health benefits also stop. So if you choose no survivor benefit, your spouse signs off on that. Of course, if you don't have a survivor, if you don't have somebody that is financially dependent on you, it's not that big of a deal. If you choose no survivor benefit and you don't have somebody covered on your health insurance, it may not be as big of a deal. So if you choose the no survivor benefit option at all, then your pension stops as well as any benefits that you are going to be leaving to your survivor. If you do have a survivor, they can't get those health benefits. They can't, pay a separate. People ask us all the time, can they pay but not get it subsidized by the government, things like that? No, there's absolutely no way unless they were both federal employees. So now we'll talk about briefly if you are both federal employees. We get this all the time. If you and your spouse, and I don't know why I motion like this, Stephen, I'm not going to be Stephen's survivor. He does have a spouse here visiting as well. But if you have a spouse,
It's just so excited to have you in the same room.
I know it's so weird. Like
We're
if you
alone all
choose-
the time. It's very lonely.
It is. It's interesting. So I'm motioning for those of you that are just listening. I was motioning to Stephen as if he was my survivor. But if you have a survivor, and now I lost my train of thought. Where was I going with
Dual
that?
agents.
Oh yeah,
Dual
if you're both federal employees.
both federal
So
employees.
if you and your spouse are federal employees, you do have a little bit different rule as far as the health benefits. If you are doing a self plus one, if one of you is carrying the health insurance and the other is not, which fun fact, it is almost always less expensive to carry two self-only plans. In fact, since they came out with the self plus one option. In every region that we've worked with and we've helped people, it was always less expensive to do two self only plans instead of a self plus one. So if it's just you and your spouse covered and you're both federal employees, you want to look at doing two self only plans anyway. It's going to be on average about 22% cheaper to do two self only plans instead of a self plus one.
Unless one of you is working, the other one's retired, but
Yeah.
that's the health benefit one we already did.
Yeah,
So,
we talked about the health benefits like Steven is saying, the self only, self plus one compared to family if you want to really go into that. But if you are covered, it's a self plus one and you were both federal employees and something happens to one of you, let's say it happens to the one that is not or that was carrying the health insurance. So the one that was carrying the health insurance passes away. The surviving federal employee can actually start the federal health plan, even if there was no survivor benefit chosen, because they technically were sufficing the 5 year
mhm.
requirement, and they're able to restart the federal health plan because they were able to carry it as a creditable coverage under their spouse. Just so you know, so you don't have to choose a survivor benefit if you're both federal employees to keep the federal health plan in retirement. And that didn't come out super great, but I think I
I think
think the
we got
gist
the
of
point.
it, yeah,
Yeah.
the point came across where you don't have to do that. But if your spouse is not a federal employee, we'll just reiterate, you do want to choose a survivor benefit if you want your spouse to be able to continue the health plan if something happens to you. So that's an important consideration. A lot of people, their spouses are uninsurable, they're not quite Medicare age, things like that. That can be a very important consideration when choosing the survivor benefits into retirement. Now, there are times, even if you are married and your spouse is dependent on you, as they're financially dependent on you, to still choose no survivor benefit in some cases. Because
Or
think
reduce
yeah,
too.
or even reduced. Yeah, look at some of the other options. It's not a case by case. Do not ever listen to a podcast or a guru or an article where it says, "Oh, don't ever choose the survivor benefit
Yeah.
because mathematically it doesn't make
Right.
sense."
Yeah.
Well, again, not everything mathematically makes sense. I pay for car insurance all the time, and knocking on wood here, I haven't been in an accident really bad and haven't you had to use my car insurance, but I still pay for it and it doesn't mathematically make sense. Sometimes you have to pay for a survivor benefit to make sure that your spouse is taken care of on the health insurance and maybe financially, don't listen to people who just make general recommendations. But also, it's important to understand mathematically how the survivor benefit works because if you look at the survivor benefit, you really want to make sure that you consider it carefully what you're looking at, and that the age difference of spouses comes into play, the health of spouses come into play. There's a lot of things that
Mhm.
come into play.
The income factors, the outside investments, the outside life insurance.
Outside
There's
life
so
insurance, a
much.
lot of things come into play. But the thing to think about is don't just also randomly choose survivor benefit because it sounds like a good deal. When again, like Steven said, you might have enough life insurance, you might have enough assets that where the other person is more than financially taken care of, they're fine. And so if you choose a survivor benefit, for example, what we're talking about, if you choose a survivor benefit, and then let's say that you live 20 years into retirement and you chose the full survivor benefit. It was costing you $300 a month over 20 years and you paid about, I think that's about $96,000 in premiums over 20 years that you paid, and then your survivor passes away first. You just paid for that benefit all those years for no
And you
payout, for
cannot
no
recoup
benefit.
that.
You
Yeah.
can't recoup
You
that.
can
So
stop it though. A lot of people don't realize if a spouse passes away first, you can actually submit a death certificate and stop paying for it, but you cannot recoup, like Jesse's saying, all those premiums you paid throughout those years.
yeah, if it is almost $100,000 in cost, it's something like that. You paid that all those years and you basically acquired almost like a life insurance policy that
Mhm.
didn't pay out. There is a chance that the survivor benefit may not pay out because there's not a contingent
Mm-mm.
survivor or a contingent beneficiary, as a lot of people know it as. So, for example, if your survivor passes away first, then it can't go to your, oldest son or, your new spouse, things like that. It basically goes away if they pass away first. So that's why you want to make sure that you're choosing, a correct benefit as well. Now, most of the time, a high majority of the time, the survivor is the spouse. That's a high majority of the time. But a lot of people ask us, well, what if I'm not married? I have, an adult son or daughter or a cousin or a brother that I want to make sure is taken care of. Well, that would fall under what's called the insurable interest. And you can cover somebody besides a spouse, but you want to go on and you want to look at insurable interest and you want to look at it. It goes off of age difference. And if there is a huge age gap, you are going to be paying that $300 a month in our example for almost no benefit. I mean, it could be as low as like $300 a month that you're leaving them and things like that. And so when you're looking at leaving it to somebody besides a spouse and they're falling under the insurable interest as a survivor, you want to be really, really careful before you choose that option because, again, it could be a massive financial difference and it may not make sense at all financially. So, the key here to understand is, again, it's not a case by case cookie cutter. Everybody choose a full survivor benefit or everybody not choose a survivor benefit. It truly is a case by case basis. And some things that you can do, if health insurance does not come into play, the spouse has maybe military benefits or their own health plan through their job and health insurance is not considered, well, then honestly, maybe just acquiring a life insurance policy in lieu of a survivor benefit could be an option. Again, I'm not saying everybody go buy a life insurance policy and don't choose a survivor benefit if your spouse has health insurance, but I am saying that's something to strongly consider. If you're insurable, if you pay that $300 a month towards a life insurance policy instead of acquiring a survivor benefit and then your survivor passes away, then the death benefit of the life insurance can go to a contingent beneficiary and you will get some benefit out of that premium if you choose a permanent product or things like that. So there's a lot to consider, which brings us to, those of you who are already retired, we get the question all the time, can we go back and can we change our survivor benefit elections and can we go and stop it or can we switch from full to reduced or things like that? Well, if your spouse or your survivor is still alive, no, you cannot go back and you can't add it. You cannot go back and you can't, go from full survivor benefit down to reduced. Now, if you do get remarried in retirement, or you get married, I should say, if you weren't married when you first retire, and then you get married in retirement, you can add the survivor benefit, but with one big clause, with one big gotcha. You have to go back and you have to make a payment to make up all the survivor benefit premium payments that you would have paid from when you retire. So, like, for example, if you retired, you weren't married, you chose no survivor benefit, and then 10 years into retirement, then you find that special someone, you get married, and you want to leave them a survivor benefit, you're going to have to make up those 10 years of premium payments, like
That's love right
36,000.
there.
It's like, yeah, 30, $40,000 in premium payments that you have to make up to now, you probably love this person, but I don't know about that much. So survivor benefit may not make that much sense. I mean, you can't put a price on love, but financially, again, that's where you have to make the decision. Now, if you got remarried very quickly into retirement, you only have to make up a few payments, it might make sense. And so this is, again, a lot of you that are retiring, you might be domestic partners, you might be in a situation where you just never got married. If you are looking at benefits wise, a reason to maybe get married, it might make sense to get married prior to retirement or very quickly into retirement. So you don't, if again, you are in a relationship where it could be serious and you could potentially get married in the future, for survivor benefits alone, you may want to get married sooner rather than later. And so there's a lot to consider when you look at the survivor benefits and choosing the option. And again, the reason we wanted to put out this podcast is you want to be educated and you want to look at your options ahead of time, because when you go to fill out the forms, as I already mentioned, you have to initial and choose your option. And if you're choosing one of the options where you're not doing a full survivor benefit or no survivor benefit, your spouse is going to have to sign off and you're going to have to have it notarized. So you want to know ahead of time what you're going to be doing. You want to plan with your spouse. What do we want to do? Do we want a survivor benefit? Do we want no survivor benefit? Are we Medicare age? What's the age difference? What's our health? What's our other life insurance and assets? Like you said, Stephen, there's a lot to consider. So you want to look at that. This is separate from your life insurance, your FEGLI. The FEGLI, you're going to choose different on that. We did a podcast talking about Fegley. Watch that one. This is talking about the survivor benefit specifically for your retirement. And we wanted to give you some education and also let you know, as you can see, it's important to know that there's going to be some choices that need to be made. So if you need help making those choices, you can go to fedsmartretirement.com and you can click on schedule an appointment and you can book an appointment with us and our team and we'll be able to walk you through those options. We're not trying to sell you a life insurance policy. That's the other difference. A lot of people that offer survivor consulting, sometimes they're just trying to sell you life insurance and they're always telling you, don't ever do a survivor, always do life insurance. No, we're not like that. We will go through and we'll do a consultation for you and help you make that choice. So hopefully that gave you some really good foundation. Stephen, anything we missed on the survivor benefit, anything that your survivor would want to know that we didn't go through today, or do you feel like we went through the main gist of it?
I think we covered it.
We covered all of it. Again, with the government, there's always exceptions to the exceptions, and there's always some other little caveats and details. And if you read something and you have questions on that, shoot us a message on fedsmartpodcast.com or schedule a meeting on fedsmartretirement.com. You can schedule an appointment with us and we can go through with your specific situation. So, yep, actually, in your case, there is an exception. Here's how it works. We gave you the foundational information. If you need information on the exceptions, hit us up there. We appreciate all of you listening. We appreciate our FedSmart community. Stephen, 13 million views year to date. Halfway through the year, we're at 13 million views. That's because of all of you guys. We appreciate you. If you have any topics or questions you want us to cover,
Yeah.
go to fedsmartpodcast.com.
We were thinking about doing a question and answer podcast. So if you guys do have questions you want answered, go to our Facebook page or even our website. Maybe start it with a podcast. Start your question with podcast so we know that you want it part of that episode, and then we can address it on a later time.
Awesome. Well, appreciate all of you. Have a great rest of your week and year. Until next time, we look forward to talking to you soon. If you need help, we look forward to seeing you on the next episode and dropping that federal retirement knowledge. Thank you for listening to FedSmart. We appreciate all of you.
See you on the next one.
FedSmart Podcast is meant for informational purposes only and should not be taken as financial advice or tax advice. FedSmart Podcast is not affiliated with any government agency or OPM. Jesse Black and Steven Puckett offer advisory services through Integrity Wealth. Integrity Wealth and FedSmart are not affiliated. If you'd like an appointment, please go to fedsmartretirement.com and schedule a free one-on-one appointment. Thank you.